and welcome back. We are back 2 weeks in a row now. We're learning technical analysis so we do not get wrecked. Welcome back to episode 21 of Learn TA with Landy. We are very blessed to have the extremely talented and well-informed Crypto Landy dropping this knowledge to us on the weekly basis. Check them out. Follow at Crypto Landy. There's the Landy bands we use right there. You can also find those in Landy's signature on X at Crypto Landy. I'm going to bring them on. We're going to have a little bit of a shortened episode today, but some interesting stuff. Hello, Landy. How are you today, sir?
Hey, Peace. It's great to be back with you again for the second week in a row. A little bit of a shortened episode today, but I think that the concept is fairly easy to pick up and grasp, and that is invalidation levels. So we typically have a thesis for where we think price action might go based on the trend, and we're going to talk about how to determine if that thesis is invalidated. What conditions need to be met to invalidate that thesis? And of course, we're going to use Bitcoin for this one. It's going to be pretty straightforward. And I think that understanding this concept will be key to understanding when to switch positions. You still give things a chance, even if it starts to hit invalidation levels for your long or your short side of your trade, or for your thesis on price direction. But we'll discuss a little bit about that invalidation and how to determine those invalidation levels based on trend, and then how to gut check the rest of it using some other indicators.
Sounds good. Sounds good, man. Should I bring on the chart?
Yeah, sure. Let's get right into it. This one's fairly simple, fairly straightforward. This is something that, based on what we've talked about, it's still, the analysis is still going to be incorporating the trend, support and resistance, volatility, and momentum pieces of what I've been teaching the entire time, right? So trend obviously is going to be either an uptrend, downtrend, or trendless, right? And then you've got your areas of interest for support and resistance, which are all based on trend. It's the swing points in trend on a swing and a close. And then we have the volatility piece, and then all of three of those create momentum, and it's all about finding confluence. So I want to point out kind of where we are right now for Bitcoin. We had a nice uptrend into a brand new all-time high, and then we went into a downtrend. We got a trend break, and then we continued with the downtrend. We actually began to create lower highs and then hit the lows and take out the lows. Now we're back into a bit of an uptrend. So how would we determine invalidation of this uptrend or a trend shift? Well, we talk about this quite a lot here. And it's going to be the last higher low would be a trend break, right? So that would begin to invalidate this uptrend. But it's not always over right away, right? So if we were going to say, all right, we're going to see invalidation of this uptrend initially on a trend break on any closes right now below 107,268 here on spot price. But what does that mean? So essentially, if I'm long off of this last higher low, well, the invalidation point for that long is going to be below this higher low. And well, that depending on your trade plan, could mean that maybe you build that long out lower, could mean that you cut it and let it hit a stop. But in reality, what it would be doing is invalidating trend continuation, right? Because we would be getting a trend break. So if we were to see something like a breakdown below here, well, then we now have a trend break. It invalidates trend continuation to the upside until we see a clear shift back to the upside, which would be back above this high, right? So here's where we can start to really lay out some criteria, right? We can say, okay, well, based on what I'm talking about for invalidation of thesis, let's say that you're looking at this trend and you're saying, well, it's kind of chopping around. Yes, it's in higher low structure, but we didn't get a close above this high. Maybe this was your level that you picked. If it doesn't close above this high, I'm not looking for the all-time high and higher. Therefore, if it swings, I'm getting into a short position. Where is the invalidation of that thesis? Well, the invalidation will be back above this high at 110,590. That doesn't mean that it's completely invalid, but it would favor, especially if it holds this last higher low swing, that would be trend continuation to the upside, and you would have to reevaluate where you'd want to get short if you were in a short position. If you were to get long in this position here off the higher low, because we did set it, we set the swing on Monday or Sunday rather, sorry, and the close. So this is a closing higher low and a swing higher low. So if you're long off of this, well, what's the invalidation of this uptrend continuing? That'd be back below the 107,260. So understanding invalidation of a trade that you might take and invalidation of a thesis, you have to understand you have to pick out on the chart based on trend in most cases, because that's where you're going to find your swing points for support and resistance, or supply and demand, or however you want to term it. And in this case, we know that there's a few different ways things could play out. For instance,
the invalidation is only based on a close, not a swing, right?
It could be a swing. It could be a swing as well for invalidation. It depends on the time frame related to something like a daily, if you're trading lower term time frames, right? Because you might not be in a position where this low gets taken out. Your entry and your stop could be very close. You're going to get your invalidation of your theory that it's going to continue higher is now hit, right? By your stop loss being hit. You might not want to build out that trade. Maybe you're trading on the 15-minute chart. You're still waiting because you feel as though it's going to head to the upside based on lower term time frame indicators and trend and support and resistance for those particular time frames as it relates to the daily. But really what would happen is we'd be invalidating trend continuation by breaking the trend to the downside. And we would be validating trend continuation on a break back to the upside, right? So now it's about what position are you in. If you're short and you got short at the highs, invalidation of that particular position for trend continuation, because you're betting, if you're here taking a short, then you're betting the price is going to go down, right? So invalidation of that thesis would be trend continuation. It would be above the last higher high, right? So it's all about determining that. And we can extrapolate then what happens after, we have invalidation of trend continuation with a trend break to the downside, is then, it's possible that we start to see a trend shift with a lower high and then a lower low potentially, right? Let me actually get rid of that because I didn't actually do that correctly. So let's go ahead and, then you have a thesis, right? So would be the invalidation of a thesis. So now we can form a thesis. If it were to do a trend break to the downside, it invalidates trend continuation right off the bat by breaking trend. So the next thing is the thesis would, you could potentially, your thesis could be, hey, I'm looking for a lower high or equal high from here. Where would the invalidation be? So if this is something that you're looking for in this case, a trend break to the downside followed by a lower high, that's your trend reversal setup. Your confirmation or validation of that would be back below the lower low, right? And your invalidation would be taking out the most recent high, because then you'd be going from a lower low to a higher high. So invalidation of a thesis of a trend change and trend reversal setup forming would be if we saw something like this occur, right? And that's where that would be invalidating looking, your thesis that a downtrend might start to form. So it's really all based on the things that we already know. It's about how do you apply that and make sure that you're setting those conditions and locking down those conditions for your trading plan. And in this case, I'm just showing like a potential for a setup that could be one that could result in the invalidation of trend continuation, thus causing a trend break. And then the thesis that can be formed off of that is we need to be aware of lower high or equal high structure, right? If we got that, that's also not a confirmation of a full-on trend shift. That's just the reversal setup. And then confirmation of that would be back below, or validation of that would be back below the most recent lower low. Invalidation would be back above the most recent higher high for this particular trend. Now, to paint that another way is, let's say that you were short off the highs, but we immediately go and make that higher high. Your thesis is now invalid, right? Because if you're betting on it going short, you're betting on it not going past this high and invalidating your protection. You'd be hitting your invalidation levels. You would have to reposition if you're smart, or you build out the position if you're still confident in other criteria that you set. But that would be validation of continuation of this current uptrend, right? So if you were short, that would be an invalidation point being hit at the high. But if you were long and it takes out the higher low, then that's the invalidation point for the trend, and likely your thesis if this is where you were longing. So that's where you then have to reevaluate and adjust accordingly within the confines of whatever trading plan you've created. Does that make sense?
Yes. And so pertaining to setting stop losses, and I realize that this is a little more advanced, but but you want to set your stop losses a little bit relative to those invalidation levels, maybe to some degree.
Sure. I would tell you that I always like to start with the higher term time frame trend, right? So if this is, if the daily is telling us, trend continuation above 110,590, trend invalidation, meaning that there's going to be a trend break on closes below 107,260, I would say that even if it starts to trade below there, that's caution, right? That you should be exercising caution, even if it doesn't close below there. It's caution, because then you're starting to enter a swing trend that would be different. So let's say that we got a swing down in today's candle below the 107,260, 268 here. Well, we'd still be in a higher high, higher low closing structure if it closes back above 108 here. It would start to give us some caution that this is at minimum on lower term timeframes than the daily. This is a consolidation, and we can start to refine which way it's going to break out from there. But the reason why I'd be exercising caution is because we're starting to form a swing downtrend, even if it's not a closing downtrend, right? So it's more risk to the downside that this closing structure might be invalidated. But if it continues to close back inside, maybe that picture shifts. So you can use the higher term time frame daily and go down to something like a 4 hour and say, okay, where are we at? Well, we're in a consolidation right now. This is the higher high on the daily up here in the green. This is the higher low on the daily down here in the red. So relative to what is occurring on this particular time frame, which is the 4 hour, we can then begin to refine how we position if we wanted to trade this. So we can say, we can make very easy criteria to understand if we're going to go hit the highs here. And we can make very easy criteria to understand if we're going to be more likely to go hit that daily higher low. And that's where we can get and refine conditions. And I would take this swing right here as an important level to see price break back above. But more importantly, how do I know that it's not just going to stop here? Because this is an area of resistance overhead, right? So we had a consolidation, a little bit of a trend break, and an uptrend to form after a really big move up. and then into lower low, higher high. So anyone that was short off of this high, their invalidation was hit because it went higher, right? So if they were betting on it going lower and forming a longer term downtrend, it didn't do that. Their invalidation was hit over here. And same for those who were longing off of this higher low right here. Their invalidation is the breakdown below, right? So they're getting chopped out to the downside, and these guys get chopped out to the upside. So we get a sharp move down and sharp move back up. And now we're back in consolidation. So I know that if price starts to trade and especially close above 109,255, we can look to the next local high. And we can take and identify a few areas. So we can mark, for instance, this area here, and start to say, okay, well, above there, I think that that price should rise to the next area of interest. And I'm going to take a common area just overhead as a zone of interest. So if we start to see price trade above 109,255, and especially close above there, we can then look to the next closing higher high as it relates to this swing high here. And we can say, okay, well, then I think that we've got about another $200 move up into this zone of interest at 109.4 to this this high up here at 109.823, right? So if it passes this zone, I can make the educated analysis that it's possible, or more highly likely, that if we were to hit this and start closing above it, we're going to go and test this high up here, which is confluent with the daily high. So I'd be looking for something like this. Above this green zone, I'm looking for price to rise. Doesn't matter where it closes. I'm looking for price to rise up to this next level and at least test somewhere around it. Whether it's short of it or whether it's above it, doesn't really matter. That's the next thing that I'd be looking for. And if my thesis is that I'm long off of this low right here, what invalidates it? Well, it's going to be the low, right? It's going to be the low. Right? So if I'm long off this low and I see this little bit of a lower high swing to possibly a higher low swing, and it starts to confirm above, the low 109,250 region, then I'm at least looking up to this green zone to get tested. Starts to close above there, I can look to the next zone, so on and so forth. That'd be validation of my thesis for taking this long. And invalidation is going to be below the low. You could give it room to the next daily low, but if it starts to take out, even I'd be even closer at 109 or 107.9 rather, almost 108. If we start to see that taken out, well, caution, because my thesis for taking this long might be invalidated, right? And that's where we need to understand how we can start to refine that criteria on lower term time frame levels. So I would be drawing out some zones like so. I would say, you know what? We've got the daily over here on the top and bottom of this structure, and we've got local lower term time frame areas of interest that now we can accurately determine whether or not our thesis is going to play out on the longer term time frame, right? So if we start to break down, we know that especially below this low, that we're very easily going to be testing somewhere in these areas down here, right? And it's going to be somewhere in that zone of interest. And then the possibility is that we get a trend break invalidation of uptrend via a trend break to the downside, and trend continuation on any moves and closes on higher term timeframes to the upside, right? So we have the daily, we've got some lower term time frame information that we can then go on. Then we can refine this, right? We can refine this even further by adding in other criteria. Okay, momentum is up, closes above 108, 152, which, by the way, would be dropping this most recent 4-hour low anywhere below there on the close open, rather, for this close open swing down here, looking as though, we're going to go test this area. So we can keep refining our criteria because we're setting conditions for invalidation of our thesis, for invalidation of a trend shift, or whatever else the criteria is. When I say invalidation, it's at the end of the day, it's going to be invalidating your thesis for which way you think price is going to go. and you can very easily set that criteria. We've been doing it the entire time. I just haven't explained it in this manner. And the main reason why is because we are going to start getting into trading. We're going to start getting into trading and setting stop losses. And a lot of that is going to be, how do you set up a trading plan? Well, first you have to have a thesis. And then when it hits your levels that you're interested in for a long or short, you're ready to enter. What is the criteria for staying in that trade? What is the criteria for getting out of that trade? And it's all about understanding invalidation of your thesis, right? And it's always right there for you on the chart. We don't have to mess around with maybes. The chart is going to move one direction or the other, and it's going to validate or invalidate your thesis, right? And that's what analysis is for. And in this case, we can get even more criteria on lower term timeframes, right? We can begin to go down to a 15-minute to see if we want to position and say, okay, the 15 minutes looking strong coming into this. We had an uptrend off of the daily test down towards, or this daily candle test down towards the actual daily higher low swing. So what are we seeing? What is the potential here? Well, the potential here is that if we start to see the 15-minute close above the 109.250, very highly likely we're going to see this green zone down here. Now, we had a big downtrend, we had a trend break, and then we had a lower low, and then we began a bit of an uptrend here before a trend break. And now we're actually in a position here where from a trend point, we are in a trend reversal setup possibility. What would invalidate that thesis would be closing back above this higher high, right? Because we had an uptrend, we got a trend break, and now if it doesn't pass this higher high, it's going to be a lower high, right? What would invalidate a short position here? If I think that this is going to be a good short trade, well, what I need to see is, does this push up and close above this high? Does it swing it? Or does it fail to even get to it before turning around? Because that would be a lower high and a trend reversal setup. Invalidation would be closes above this higher high, right? So that would be the invalidation, would be a close above this higher high. And then confirmation of a trend reversal setup would be looking at it this way. If it, let's say this was the high, the confirmation would be passing the lower low and moving into the red zone down here. So we have very clear criteria and a very clear setup. Now we can determine the validity of that setup very easily. If somebody was excited and wanted to take this high, this as a potential lower high opportunity, well, then their invalidation is just overhead. They don't have to be right, because let's say they take their short here and they put their invalidation right at this high. If it passes it, they can watch the candles to see if we close any higher term timeframes or close 15-minute candles above it, right? So they could very easily position around this high as a stop, or just above that high as a stop if they want to give themselves room. I would say that if your stop is hit and it's right at that high, you just look to see if candles just start swinging around and failing to close above here, or come back up and then close under with a new trend, right? But that would be, where we'd be looking for a trend reversal setup. If it were to occur, this would be the logical area, right? And in fact, for the 15-minute, you can refine even further, right? We can say, okay, well, based on what we're seeing here, this area is not getting closed. It's not closing above, or hasn't yet closed above currently this zone on the 15-minute, right? So if this is going to be your short zone, why am I not? Wasn't now? There we go. It's snapping now. So if this is going to be a zone that you're interested in taking shorts in, you got your first two swings into it. And if you're looking for this trend break to result in a lower high, then, you can start refining your criteria. Momentum's still up, so it still has an opportunity. It's at the edge of the bullish control zone. Could it get some bearish divergences still? Yes, it could absolutely get bearish divergences if it puts in a high, but it's really all about, does it put in a high, right? And if this is where you're positioning in preparation of a possible lower high after the trend break, your invalidation's just overhead. You can always reposition if you're still, if your thesis is still showing valid, um, even if it fails to close above this high, or you just wait and reposition later for your short position, right? And that's the only reason why I'm talking about shorts is because we see the trend right now was a trend break. You could have a very different thesis. Maybe you're on a higher term time frame than the 15-minute, and this was a higher low. Like that's where you want to understand that this is a higher low, for instance, on the hourly. So you want to have the conditions and criteria laid out for you. Typically, I wouldn't have skipped from a 4-hour to a 15-minute. I'd go 4-hour, hourly, and then 15-minute typically. But this is all just to illustrate the point of understanding invalidation of your thesis for what you're looking for, right? So, and the 15 minutes a perfect example of it's still got juice to the upside. So if somebody's short here, they run the risk combined with like the hourly that this, the hourly is on higher high, higher low structure. This 15-minute, while getting a trend break, could be invalidated very easily. So, it might be a higher risk short, but if they're confident in what they're seeing and they want to stay in that trade, they're either going to get hit with an invalidation or they're going to get hit with a confirmation, right? It just simplifies the process when you are starting to say, okay, how do I evaluate price action? How do I reference when you have a trade plan that is risk managed for yourself? How do I assess if this meets the criteria for my trading plan, right? And understanding invalidation always leads you to understanding validation, right? So understanding invalidation of thesis, I think, is one of the most important things. And this is going to lead us in the future piece into actually talking about trade setups, which we have been not doing. It's all about how to analyze what's going on. And now we're going to start shifting the mindset.
Well, I dig it because I think that'll help me wrap my head around it a little bit more. Like right now, we've just, like you said, we've been analyzing and setting, like, how do you set the zones of interest or the targets, and like now validation, invalidation. So I think that all makes more sense when you're talking relative to how am I going to use all of these targets?
Yes. How do I make use of this?
Right.
And so, hammering home the process of analysis is something that we'll always continue to do moving forward, and even revisiting core concepts. But we're going to start accelerating into how do we make use of the concepts and introduce new ways of looking at this and thinking about it so that we can form a trading plan and thesis for how we want to execute that trading plan. Because at the end of the day, you don't want to be driven by emotions or what you think or feel might happen or what the timeline is saying. You want to be driven by what the live auction is telling you so that you can take advantage of those moves to the upside or downside. And that's really all dependent on your overarching analysis and conditions being met that are in your trading plan and removing all of the emotion. Because if your invalidation is hit, okay, move on to the next point, right? Because at some point you're going to see a downtrend form. At some point you're going to see an uptrend form. So there's always the next opportunity. And it's about refining that and being able to practice that. We'll even move into, kind of expanding on this concept and weaving in other multiple time frames of analysis and how we can start to form and catch, how we would evaluate trying to catch good moves. And then we'll even get into how I think people should start executing this stuff for while learning. You can form your trading plan and learn at the same time via paper trading, and it can be done right in TradingView. And I think that that's going to be very important to getting people leveled up in terms of their knowledge, gain experience, adjust their trading plan, and learn on the fly how to create a trading plan through experience in the markets, through failures and successes and things that maybe they didn't account for. And now they can go back and refine their trading plan. I'm a big I'm a big fan of learning hands-on, but through paper trading, not going and betting on leverage on various exchanges or
Or with
dexes.
paper trading, it's the best of both worlds. You get to learn by losing money, but it's not real money that you're losing.
Yes. Or you can learn by gaining money and become an absolute beast right out of the gate, right?
Sure.
Like if
Sure.
you nail it, like I've seen people that are they go through the process, they refine a trading plan, they're seeing what's working, they're getting a lot of wins, they're banking a lot of P&L in their paper account, and now setting, and then I will challenge them. Did you set conditions for this? Did you set conditions for that? And that's something that we can go through, you and I. And I think it would be fun because there's no risk involved, and you get to learn more about yourself, and you get to learn how to build a trading plan and how to set conditions, how to set your invalidation of thesis, and really start refining how to trade and make money in markets. Because at the end of the day, it's about making money. And you can make money to the upside and you can make money to the downside. And it's not as difficult as many think. The hardest part is us and our emotions. Therefore, we have to nail down our analysis and nail down our thesis and what it is that we're looking for, and then set a trading plan and execute the trading plan while removing all emotion. And that's what I'm going to start getting us into.
That works for me, man. I really appreciate it. I know it was a little bit of a speedy episode, but I think, to be honest with you, 30 minutes might be a better target window anyway.
And we might just have to get, because it's tough for people to get in and jump in live, but I think that it's a great thing that we have all of this recorded, right?
Oh,
and it's already there, so
right.
Anybody can watch this after the fact, because I think these are important concepts.
In 35 minutes, we still got over 200. So, and that's after taking a long time off and just kind of catching back some momentum. So, I mean, we did that's a decent turnout for our middle of the day shows once a week. So, not bad in a half an hour at all. And I do think that this was really great and good digestible content. And I'm actually really excited at the prospect of maybe doing some, setting a plan, making some paper trades actually as part of the show and showing how to do all that. And then, then next week accounting for what did I do to make this trade or how did I do?
Yeah. And we can even have fun with it. We can have you do it, right? Based on what and I can guide you through. Right. And then
that probably makes a lot of sense, actually.
And then you can ask questions and And just, it's one of those things of like, when my first mentor, who was a male, a really great guy, started getting me into it, and then basically shifted me over to a female, who was one of the top tier traders in the firm. And she sat there with me after I went through and I studied and we've had all these different discussions and really I learned so much to that point about analysis. But then she sat down with me and was like, all right, let's execute together. And she held my hand through it, and I asked questions, and it really opened my mind up to it, experiencing that, having somebody right there to reference, to say, hey, did you check this first? And if you didn't, put it in your trading plan, because that's something that you're going to want to check in the future. She didn't try to guide my style either. She was just based on what I was doing. She wanted to refine who I was becoming as a trader. And it was a really good way to do it. And I will say that I've tried to emulate much of what she taught me. But the student becoming the master takes a very long time. So these are very valuable to me. Every time I do any kind of Learn TA with Landy show with you, or any time that back in the day when I used to coach, I learned more about me than anything else.
You're just looking at yourself from a different perspective is how some people see it,
Yep.
So yeah. I dig it. I I could talk to you all day, sir. I know we
Yep.
both want to jump into the Hermetica hangout, which
Yes.
started 10 minutes ago.
Farmer Joe's over there, I hear.
Farmer Joe, I see him. I'm in, but I have it muted. I have the tab
Oh,
muted,
okay.
so I see Farmer Joe is talking. So and Dave's mic is muted, so they're letting him talk. So that's good. I see actually Trips up on stage, so I'm very curious now to see. I wonder what he's talking about or how he ended up on stage. Yeah,
Yep.
I think it's so guys. Excellent
Awesome.
stuff.
Thanks,
Follow
Peace.
Landy. Thank you, Landy. I really appreciate all you do. I think you're a tremendous asset. I consider you a good friend. And even though I don't know who you are, I do actually have some trust in what you have to say. I do appreciate you, man. And I'll see you in the Hermetica Hangout. Guys, tune in. We're back on it every Tuesday at 1 p.m. Learn TA. Better than getting wrecked. I am Peace, Love, Music. This is my good friend, Landy. And we'll see you next week. Thank you, Landy. Have a good one, man.
Thanks, Peace. Take care, everyone.
See y'all. Peace out.